Guys, welcome back to Firefighters Financial Toolbox. Today we're going to talk about another state and whether or not it's tax friendly. A lot of people tell me that they want to retire to Texas because Texas has no state income tax. And it sounds appealing, doesn't it? Because hey, if I do have a side job after I retire, they're not going to tax the income. They don't tax my Social Security, so that looks good, right? If we take a look, but actually Texas is not as tax friendly as somebody might think. Let's take a look. So now you will pay $0 of Texas state taxes on your pre-tax income. So let's say, in my case, we're expecting $15,000 of Social Security. We expect to have, let's say, $35,000 from our retirement each year. I'm born in 1969. Married, and we'll just use their default zip code. Okay, so let's see. Obviously, federal taxes on that, and that's $50,000, you guys. For married filing jointly would be $3,916. So not too shabby. And as you can say, state taxes 0, local taxes 0. And it says Texas is tax-friendly towards retirement. Social Security income is not taxed. Withdrawals from retirement accounts are not taxed. Wages are taxed at normal rates, and your marginal rate tax is 0. So it's not. Also, if you have a public or a private pension, income is also not taxed. Sounds really good so far, right? How does Texas make their money? So let's scroll down a little bit and take a look. Texas retirement tax. Thinking about retirement in the Lone Star State? Texas is a great place to retire, and its sheer size provides retirees with a wide selection when deciding where to settle down. Big cities like Dallas, college towns like College Station, beach towns like Galveston, and one-of-a-kind state capital like Austin. The low tax rate in Texas is another reason to retire in the Lone Star State. There is no state income tax, which means, as we said, Social Security is not taxed. Is Texas tax-friendly for retirees? Yes. This is largely because of the not having an income tax. But let's look at how they do get their taxes, you guys, because there has to be something, right? The Lone Star State's friendly retirement income tax laws, along with its low cost of living, can compensate for other taxes that may put a dent in a senior's budget. Sales tax in Texas is over 8% on average. The average effective property tax rate is 1.86%, the sixth largest in the United States. Aha! So, they're not taxing your income, they're taxing your home. Now, as we said, Social Security is not taxable in Texas. Are there other forms of retirement income tax in Texas? No, whether you have income from a 401k, a pension, or an IRA, Texas will not tax that. It's an especially good location for those planning on such a work-tirement. So, as we said, if you're going to have a little side hustle or you're going to do some side income, it has no state tax. How high are the property taxes in Texas? Now, I've had some viewers tell me the reason I shouldn't look at Texas is just this, you guys. So, very high. The average effective property tax rate is 1.86, sixth highest in the U.S. That means a typical homeowner can expect to pay about $1,860 in annual property taxes for every $100,000 of home value. So, let's say you have a $500,000 home. You're looking at over $9,000 in annual property taxes, you guys. That's pretty high. Despite those high property taxes, though, housing costs in Texas are below average. Overall housing in Texas is right around the national average, with the median home value at about $142,000. Seniors in Texas also benefit from a number of property tax relief programs. What is the Texas age 65 or older exemption? All Texas homeowners who use their property as their principal residence can claim the Texas homestead exemption. This exempts at least $25,000 of the property's appraised value from taxation. Seniors age 65 and older can claim an additional exemption of $10,000 at the state average poverty tax rate of 1.86. Both exemptions would equal annual savings of about $651. What about sales tax? How high are they in Texas? Very high. The sales tax rate in Texas is 6.25, and local rates can be as high as 2%. On average, Texans can expect to face about 8.2%. This is the 12th highest in the U.S. So you're not getting it taken out when you get paid. You're paying it when you pay for something, you guys. What other taxes does Texas have that I should be concerned about? Now, Texas does not have an estate tax or inheritance tax. The only other taxes that may affect your retirement budgets are sin taxes. Texas has a number of sin taxes, including an 8.25% tax on alcoholic beverages and a tobacco tax of $1.41 per pack of cigarettes. So if you smoke or you drink, they're going to get you there too, folks. But in answer to the question, you guys, depending on what kind of sins you partake in, how much you drink, how much you smoke, or how big your house is, it's going to directly affect how much you pay in taxes to Texas. So you're not going to pay it on your Social Security. You're not going to pay it if you have a side job. You're not going to pay any state income tax on your IRA withdrawals or a pension if you have one. These are all good things. Here in Oregon, we pay 9% on all that, so that's a big savings. But we also don't have a sales tax here. So paying an 8.25% sales tax on everything you buy could definitely affect how much you would want to spend and how much you'd want to buy things. So these are all things to consider when you think about where you want to settle in retirement. Anyway, you guys, what do you think? If you're from Texas and you know any of this to be inaccurate, you guys put it in the comments. I hope you got something out of this. If you did, do me a favor, drop me a like. It really helps the algorithm. And if it's the first time you're here and you're new to the community, think about subscribing. The community's growing and we get smarter and better as a community. All right, we'll see you. Thanks.